Hello and welcome to our reporting season spotlight, your shortcut to the results that matter. I'm your host, Juliette Sarli. Harvey Norman has lifted its half-year profit by almost 40% to just under $280 million on the back of higher revenue from its franchises. The retailer says franchising sales are up 7.2% in the first 21 days of February, but added its overseas retail results were adversely impacted in the half by a weak economy in New Zealand. Chairman Gerry Harvey indicating that they did deliver a solid result, though, with the company making what he called significant strides in enhancing digital, online and in-store experiences alongside the expansion of its global store network. And of course, we mentioned an uptick in retail sales for the first 7 weeks. Harvey Norman to pay an interim dividend of 12 cents a share, fully franked, up from 10 cents a year ago. Shares up 4% in early trade. Endeavour's net profit dropped 15% in the half, with retail sales down 1.5% on subdued consumer spending and a Victorian supply chain disruption. It's cut its interim dividend to 12.5 cents per share, down close to 13%. Group operating costs of doing business increased by 3% as inflationary pressures on wages and rents were partly offset by its cost savings program. And Endeavour Group is still looking for a new CEO following Steve Donohue's planned resignation on March 17. Ari Mervis will be appointed temporary executive chairman from that date. Endeavour expecting conditions to improve on its retail market if inflation moderates. PEXA Group has reported a loss of $32.7 million in the first half, but with underlying cash generation growing, the group will distribute $50 million to shareholders via a share buyback. PEXA has also flagged it expects the macro environment and property market to remain uncertain in its Australian and UK markets. However, the group has reaffirmed its full year 25 guidance and will manage a CEO transition in the second half, with Russell Cohen to step into the role at the end of March. TPG is expecting stable earnings between close to $2 billion as the impact of regional sharing costs accrue prior to revenue. Service revenue and mobile service revenue grew in full year 24, with total mobile subscribers up almost 2%. Full year dividends stable at 18 cents per share. Bubs Australia has reaffirmed guidance after posting a net profit after tax of $3.6 million. After reporting in the red in the last half, it's expecting earnings to be breaking even before share-based payment expenses and expects margins to lift. Life 360 has reported a 33% rise in total fourth quarter revenue to a record $115.5 million US. Total subscription revenue up 32% year on year to just under $79 million US. For full year 24, Life 360 generated revenue of $371 million US, up 22%. And it's guiding full year 25 consolidated revenue of between $450 to $480 million US, which the market clearly likes. Australian Financial Group reporting a 6% rise in first half profit to $15.3 million. Revenue in the period jumping 11% to $626 million. The Mortgage Broking Group reporting gross profit of $69 million, which was a 4% jump from the prior year. AFG will pay a fully franked interim dividend of 3.8 cents per share. The stock down today, but up by about 9% year to date. And Arcadium Lithium has withdrawn its prior guidance due to a pending acquisition from Rio Tinto, reporting a $7.4 million loss in the last quarter. We've also today heard from Resolute Mining, registering a $13.3 million loss in 2024, which was down 115%. It will not be distributing a dividend, and these results partially stem from sovereign risk materialising when the CEO was detained in Mali for 10 days last year.